Hey guys, how's it going?
It's going.
Good.
Oh, all right,
For
okay,
yourself.
doing okay. Finally got my taxes done. That was a very painful and expensive experience.
Yeah.
No.
Made too much money.
No, it's just like a small business. Of course they just tax you any way they can. So you got to be
Yeah.
creative. Not creative. Just in case, yes, he's listening. I'm kidding. No, you know how it goes. You got a business and you got to account for everything. So you just don't want to don't want to lie. So you got to find all the documentation and dot all the I's, cross all the T's. Fun stuff.
It's always a pain.
Yes, it is. Yes, it is. I wonder if like other countries have this sort of like tax debacle that we have to do every year. I don't know if this is like a just for us thing, or I don't know, it's just weird. And like, who came up with the foreign names? Like what is this?
Yeah. And they always try to make it more simple and it gets more complicated.
That's right. That's right. So, any success stories at all this week? I don't know. It's been a little rough for anybody trying to figure out like what's going on. Yeah. Shaking your head.
Yeah.
Yeah, me too. Me too. I woke up the last 2 days and it's like, oh, interesting. Like future's still up, and like you kind of you see them kind of flatline, right in the first couple hours of the night, and there's just no selling or anything going on. So it's kind of a interesting use case of like the sellers just evaporated, or maybe they're looking for something else that that's supposed to come around, or somebody's got some insider information, so they're just driving the market up. Who knows?
Yeah.
But I don't want to speculate at this time, I guess. But
yeah. I had some software stocks I was ready to give up on, and all of a sudden they just came out of nowhere and did crazy.
yeah,
But it's like software was dead, and then next week it's comes right back.
isn't it funny how that works?
Yeah.
Yeah, it's like but like to be honest, like I think a lot of people missed buying on the dip, and like I'm not talking about just like retail traders. I'm talking about like hedge funds. Like I've been reading some articles,
Yeah.
just some like ancillary information about people, like fund managers and stuff. Like if they're complaining, that means they're losing money. So,
Yeah.
and usually those guys are in on the deal. So, I just think that it's it really does kind of have that like wave 5 characteristic. So I'll kind of talk through that stuff here. I'll spend a little bit more time like in a bullish scenario, and then like a potential reversal, or potential reversal points here, and like what could happen, some levels to watch out for.
Okay.
The most irritating thing is I have to adjust all of the charts.
Yeah.
No, it's okay. It's fine. It's my job. Um, but before I get rolling, Will, I know you wanted to talk through that wave 4 scenario I mentioned earlier today. Okay,
Mhm.
I can definitely draw that out, and I can even tomorrow. Don't let me forget. I will share some documentation on that. Like there's a couple of really good websites that can give you like a primer course in anything really like wave theory related. And I mean, as you've seen over time, that like a lot of these fib levels and a lot of these wave counts and stuff, they typically align. I mean, sometimes it goes out the rails like lately, but usually that's when there's like an outside actor like trying to move the market in some sort of place. Um, so with that being said, is there anything else you guys had special interest in or wanted to cover?
I just
No,
which good. I was just wondering your opinion. It just seems to me like it's just big time sector rotation. It's like when all of a sudden, in these hedge funds, they just go from one sector to the next.
Bump it up,
Every
sell it.
Yeah.
Yep. Yeah, I can talk about sectors. Real, were you gonna say something?
no, I'm more or less have been positioned for a while for either a wave 4 or end of a wave 5, and I think it's best for me just to stay in that position.
Yeah, it's it's kind of a difficult call where I mean, like, we talked about hedging before, and having to, like having a. I mean, as long as you don't have like a time constraint, when it comes down to, let's say you're holding, a whole basket load of options, that typically, makes the burn feel a little bit harder. So like if you're trading like zero DTEs or like weekly options, like yeah, it's been a bad week. It's been 2 bad weeks, but you know, at the same time, yeah, I remember just a couple short days ago, we were calling like, oh, kind of feels like the capitulation wave here, you know, and for the bulls, and it was. So I think, you know, from like a sentiment perspective, I think we're kind of getting close to that like bearish capitulation, and you know, just with reading the volume and stuff here. Now, here, let me, instead of looking at my stupid face here, let me share so we can at least have something to talk towards. And here we go. Should be seeing the screen. And this is from last week. Okay, so yeah, long story short here, guys, is like, you know, with markets kind of making a new high today, like I just kind of like, you know, you wake up and you're like, nah, no, it would have reversed by now if they were gonna keep it to like a head and shoulders or something like that. But you know, I'll talk about what the, you know, pattern implications are. But from a sentiment perspective, I think that if you zoom out and you kind of look at this, the ridiculousness of it all. You know, I guess ridiculous is not a strategy. So, you know, just keep that in mind. I kind of think that, you know, there's really like a number of things that we could potentially see here. And even if you pull it a little bit farther back, you can see that, you know, we've had these pretty major dips that have gotten bought up over time. And this is really just more like a, you know, liquidity fueled post-COVID, you know, sort of thing. I mean, like you guys have seen those charts before where it's like, you know, it's a direct correlation to liquidity in the marketplace. So if the Fed's, you know, doing quantitative easing, you're getting expansion of PEs, you're getting expansion of, you're getting more money supply. If you're getting contraction, then, you know, they're trying to put the brakes on stuff. So I think what we're seeing right here is, it's sort of like, I don't want to say this because I feel like, you know, every time I say something bearish, it's just the opposite happens. But when you're kind of looking at a scenario like this, where you see these like big major dips and these things that you know, they just get bought up to space right away, you can always kind of draw like wave counts within them. And I think that we have seen this, we have seen like the big wave 3 here that's taken place since really like 2022. And you know, you can make the argument here that we've got some consolidation zones here for other waves, like, you know, 1 through 5 here. So you've got you know, usually it's the law of alternation, where you see you have like you have this like, usually I call it like a lazy wave. Like this is kind of like a lazy wave 2, and this is like a lazy, or not a lazy, this is a very sharp wave 4. You know, we all kind of saw that, but there's also this sort of behavior that happens typically with you know, like markets that are kind of like getting close to their climax, I guess you could say. And if you look from like a daily perspective here, like every time you see something like you know, like a, you know, major RSI kind of divergence here, this is also where you start to see like more consolidation, and then ultimately some sort of like decent, you know, pullback afterwards. It always seems like it's you know, the cycle of excess, you know, feast and famine kind of thing. And you know, we've gone from, you know, oversold to overbought in like just a handful of days, and this now makes the second historic rally in just, you know, well, really in a year. So all this sort of like speculators kind of, you know, heaven behavior is, in my opinion at least, like it's like the behavior is kind of like you know, if you're going to see a blow off top, now's the time. But there's really no guarantee that that's going to happen. So I mean, like, you know, we always say that, you know, like equities are climbing the wall of worry, and that seems to be what the case is right now, where you can see that, you know, we've had this. Sorry, 1 second. So like, to kind of fill in some context here, you could make the case here that this is, you know, what we see. Add some color here. All right, so if you look at something like this, you know, you can kind of get the gist of it. Where, I mean, this is it, you know, wave counting is subjective. I will say that, but I'm kind of using this as like an example. Like this is sometimes if you draw from like peak to trough, you can get a pretty you know, pretty good understanding of, you know, like what these waves typically extend to. Now, typically you don't see like a wave 1 exceed a wave 3 kind of thing. So potentially, what we could be looking at is you even got to draw it farther back. So maybe this is a, you know, but who knows? Like you got to look at a log chart to really understand what the like what the implications of something like this is. So I guess kind of put it back in more context here. Let's just kind of expand the pattern here and get a little bit more of a wider kind of feel to it. So it's entirely possible that you see something like this where you've got this wave 4 back last last April, and then we have this this like wave 5 kind of looking thing right now. So with the speed of this kind of rally, you can see. Sorry, my throat's I don't know what happens every time I do this call. But so if you look at this kind of setup here, if this is the last wave 5 in this big long series, then this could actually be like the final wave 5. But the odds of that happening are, I'd say, it's plausible, right? Like it's plausible that you could have a big kind of rollover. When you zoom in here and you look at some of this volume, you really did have a very strong dip buy right here. And then you also had, some pretty heavy selling up here, with the Iran stuff that's going on, plus the oil, elevated oil. And I mentioned in discussion today, there's a couple of factors that we didn't really have last April with the Liberation Day stuff. Where you've got this, fairly sharp sort of correction, and then heroes come in and save the day with their big bags of money and capes. And then we just never touch bottom again. We get kind of close, but this to me kind of looks like a here if you kind of look at this from more of a longer term perspective, you can see that we do have the potential here for some sort of like wave 3 kind of thing. And let me make this a different color. Yeah, let's do 4 hours. It's probably a better view. So you can certainly make the case here, and that longer term, I think what we might be seeing is that this has been kind of invalidated. This wave 3 up into like wave 4 kind of thing. It's possible that we just saw this we just saw this wave 4, and then we are going to see this wave 5 up here. So if I take out some of this junk. Let's go in and kind of measure some of these things here. But I'm just going to be honest. Like at this point, the market's just dominated by speculators, and it's really difficult to get kind of a pulse on like what's actually going on. Just because there's really 2 camps right now. One camp is, I'm not buying this crap. This is way too expensive. It's way too prices are way too high. It's true, they are, but doesn't mean they can't go higher, right? They're potentially. So when you measure like wave 1 and wave 5, if wave 3 is extended, which it was, I want to do all that stuff and talk a bunch more. I guess all I was going to say here is that once it exceeds this like the same distance as like a wave 1, then it certainly qualifies as as like a final sort of terminating wave for a larger pattern. It doesn't matter if it's a very short time frame, but what typically matters is if it makes a new high or not. So the S&P made a new high, and if you look at like the Nasdaq here, it's either on its way or it will. It's right there. It's going to do it. But I mean, just you see the speed of this. It's incredible. But that's kind of how like wave 5s behave. And we've kind of seen that with the entire run up since think about it, since last April. And if you think about it from the context of, if you zoom all the way out, all the way back to like COVID, you had a lot of gloom and doom, a lot of uncertainty on, like what's going to happen in the economy. There's a lot more like longer term bears out there. A lot of people calling for, we're going to have a stock market crash and stuff like that. And there was some relevance to that. I mean, we had massive layoffs like right away. We had a huge disruption in the economy, but again, like the government just injected it with liquidity and kind of saved the day. So since everything's kind of fed on liquidity, it just didn't really go down. And there, and what that does is that kind of generates that momentum where sprinkle in some AI trade in there, sprinkle in some this, that, and the other thing. Everybody's been making money for years and years and years being a bull. So I think once you get that like accumulation of lots of wealth, lots of prices right away, you get a lot of excess in the system. But there's really no like existential threat to the system other than just taking the liquidity away. So if the Fed's tighten rates, that's why they want the rates to stay down, because they can keep borrowing more and keep spending more and keep inflating it away because everybody's making money through the stock market and stuff. But what that's doing is that's still kind of separating the haves from the have-nots even more with accelerated prices and things like that, where like the top couple percent of Americans have a lot of wealth in just stocks and bonds and real estate and stuff like that. But I guess the reason why I bring this up is because once you get to this sort of phase, like it's taken years in the making here to make this sort of upward crazy trajectory. And at the very end of it, everybody's buying dips, everybody's got everybody thinks things are just going to the moon, and who am I to say it can't or it shouldn't? But this, I do feel like this is a very sort of normal part of market cycles. And for people that do like wave counting and technical analysis, like there's always different ways to skin a cat. Like you can always look at the different the different pieces and say to yourself like, oh, this is a wave 3 or this is a wave 4. And yeah, I mean, you have very, very similar pattern constructs over different time frames. That like wave counts and fib levels, they're all universal, I guess, where it's different time frames have the same sort of 5s and 3s and same sort of retracement levels and stuff like that. So it's really kind of difficult to get a good sense of like very, very long term, like where we're at, where we're going. But now that we've got enough like history behind us here, and now that we've got ratios from other big bubbles and stuff like that, we've always got these Shiller PE ratios, which I think is very accurate, by the way. You've got valuation metrics, you've got concentration of capital, you got all these different signs of bubbles out there, but there's no real like catalyst to crash it. There was Robert Ballin had a really good article, I think it was a couple weeks ago, about how a lot of the put buying in Q1 stopped an actual market crash, just from the way that like dealers had to hedge the flows and they had to buy in because everybody's in the market. It's really easy for traders to buy puts and stuff, and that forces dealer hedging and buying. So yeah, it's just an interesting article. So if you take a look at Seeking Alpha, it's a good one. But I wanted to give you guys that kind of background context because it's always I wouldn't say it's a surprise, but it's always kind of it kind of nits you a little bit when you do this for a living. You're just like, oh, come on, guys, greedy jerks, like, driving up the market. But then, if you're on the winning side of the trade, you're like, oh, this is awesome, this is great, right? But you still need bulls and bears for the market to actually function well. And what's happening right now is really I think the capitulation part of, bears finally got a little bit lucky. They finally had some sort of traction here, like in February, and they had a whole lot of bad news. And, March, it was also bad too. But as soon as you get into April, it's like, nah, we're not going to worry about that anymore. We're just going to keep going. But, anyways, like, I just wanted to kind of like talk it through, because the psychology piece of it is often forgotten about why these sort of things happen. And it's not necessarily because it's a short squeeze either. If it was a short squeeze, you would have had a very strong retracement where you had a lot of trapped sellers. And, I think we did have a lot of trapped sellers, but, fortunately, they didn't have as deep of pockets as whoever is driving out the market here. So I think that it could be a number of things that's driving this sort of behavior. I don't really think it's really greed so much. I think it's just trying to make new highs and complete like technical pattern tops, because it's a lot easier if you want to trade the market with big dollars, if you know what's coming next. And without some sort of new high, it's kind of like, well, a lot of traders know that this is a wave 4, and this is a wave 5. Like you can see clearly, clear sort of signals here. But the real question is really like, what comes next, right? And that's what we try to figure out. So we already know that, this does look, again, I do think it's wave 5 here, but we already know that it's exceeded wave 1, at least for the S&P, which, can mean a couple certain things here. But I think there's really two outcomes. One is you have a continuation of this, and it just turns into this melt up, blow off top scenario that ends horribly for everybody. But to be fair, I think it's bad for business if you're a broker and you're somebody like, BlackRock and those guys, because, if you drive up the market and make everybody feel like everything's fine again, people stop trying to withdraw their money. And, like Blue Owl, right? They've frozen frozen the withdrawals from their private equity fund because everybody's getting, the heebie-jeebies about the market. Well, I think some of this is by design, but I also feel like part of it is because there's a larger sort of sentiment, like a group think that's at play here. So, as we've said before, like blow-off tops are very dangerous, just because like everybody piles in life savings, full portfolio long, and they're buying the trash at the top. And then what happens is the rug pull, and it never returns to that price. Now, I mean, if you've diversified and you have your money in different stocks, like let's say you kind of split the difference. You've got money in Nvidia, but you've also got money in, let's say like Roblox or something, where it's, I feel like it's kind of close to bottoming, like a long-term sort of thing. So you kind of split the difference. Let's say your bubble pops and, Nvidia sheds $3 trillion worth of value. That's going to wipe out a ton of, wealth, paper wealth. It's only real money if you withdraw it. And I mean, it's money, but it's really just numbers on a computer screen until you actually like cash it out, put the money in your bank. It's not, in my opinion, it's not really money. You're just kind of feeding a system with liquidity. That's just numbers on the screen. Back in the day, it used to just be, it's cash, right? So if you got cash in bank, you got to build a bigger bank, but here you don't. It's just extra numbers on the screen. So it's easier to become desensitized to these sort of things. So rant over here, but all I wanted to say is that there's a lot of sentiment that drives these things. And when you see a lot of these like low volume sort of setups, typically it's just bears have given up. They're like, screw it, I'm not shorting anymore. Like I've lost too much money over the last 4 or 5 years, like not doing it anymore. And you get a lot of people that feel like that right now. A lot of retail people that think they got it figured out, and then all of a sudden you're like, nope, not anymore. And that's what these things do. So it's the bears do it slow in steps, so they can. Well, sometimes they do, but like this last sort of correction was very difficult on bulls and bears, because it was difficult to figure out when the next like dip was going to get bought, or the people that were buying the dip, maybe they're just too early and then they got sold into. So when that typically happens, you usually get a lot of capital that changes hands. So you get a lot of revenge trading and just liquidity, really. And that's all about wave 5. So wave 5 is really just there to extract money from the people that think they know what they're doing to the people that know what they're doing, and have the money to back it up and actually do proper dollar cost averaging. So from a retail investor perspective, what can you do? What can you do to take advantage of this? Well, a lot of the tools that you have in your arsenal here is, so I mean, you guys understand the concept of hedging. Like if you've got like open shorts, you can, and if you have shares, you can sell calls against them in order to take some of the sting off of it, and you can set stops on those as well. To be honest, like I think it's kind of, it kind of looks like it's heading up to about 7,100 here. But that would be a very, very extended, wave 5 here. I think it's probably just going to be Thursday, Friday, and then at the end, and then next week, the whole regime, with options, gamma and stuff flips. So, the last 2 weeks have just been, very, very positive, gamma and Vanna and all Greeks and stuff. And that just produces a melt up sort of situation. But now I think that, the volume has dipped so much here over the course of just a handful of days, where you're starting to get people that are sitting out on the sidelines, and typically you need liquidity to like you need liquidity to drive these sort of moves and keep them going higher and higher, or really just a lack of sellers. So I think you have both things happening. You've sucked out a liquidity out of the system because retail traders are just quitting because they're broke. And then you also have the people that are revenge trading. You also have hedge funds that are buying just to keep up because they want to make sure that they can get the returns as well. You have all these different scenarios where people feel like they're always late. FOMO, it's a true thing. So from a bullish perspective here, I think the biggest thing to look at, I think, is if we see that this wave 5, it's kind of all about the measurements here. If we see that this wave 5 exceeds this sort of level here, then we know that it's not a wave 5 and it's a wave 3. So you could see something like this, where let's say it reaches just a little bit higher, and then you could get some sort of the first sort of scare where it drops real fast, real quick. We've had sort of this lazy kind of wave 2 here, and again, like I was mentioning before, the law of alternation. You get one wave that's sharp for a 2, or one that's lazy for a 4, or vice versa. You don't typically get this consolidation for both of those waves. And I feel like that's what's happening here. You can actually kind of see it with this last move here. You get another gap up, even when we had bad news. Still, I mean, we're down 2% on Sunday, and then in the morning, they just bought it up all day, and we ended the day green. But it's kind of how it works sometimes. So in theory, we still haven't quite eclipsed this range here, so it still kind of qualifies as like a final wave. So what I'm looking for is really like this 7120 mark, and if we have this, and if we have some sort of poke through of this, then I think you'll probably have like a trigger for a melt up. And again, if you're open short, that kind of thing, you can sell calls. You can buy calls because the calls are cheap right now. But I think the the big thing is just to manage risk. And if you have like leveraged instruments, things like that, it can be very difficult, especially when you have day after day of 1-2%. It just keeps going. But until a real seller steps in and sends this thing down a couple percent, usually it happens like during the actual cash trading session day. It doesn't really happen at night during futures, just because like you've got a lot of vested parties in here now that they want to keep this thing rocking and rolling. So if they even let it fall just a bit, they lose momentum, and that's really how you keep a market pumping, is you just never let it fall. Or when you let it fall, you buy it back to where it was, and then you deploy a lot more capital to keep pushing it. And that's kind of what's going on here. So and that just drives more liquidity into the system. So that's kind of like the line in the sand here is at 7120. I feel like anything above that is anything above that's going to be like melt up scenario. But anything below that, that's where I'll kind of transition here into the bearish views. But I don't want to do that quite yet. So if I get this out of here, first of all, before I keep going, does that make sense?
Yeah, but what you're saying about a melt-up scenario, what would that look like as far as where it went to if it was a melt-up scenario?
Say that again. Where it went to?
You're saying if it extended past 7,200 or so?
Yeah, if it went past 7120.
It would be kind of a melt-up?
Yeah, meaning like, I mean, it is kind of right now, but I feel like if it's above like 7120, that'll trigger a lot of like a lot more hedging, a lot more. So like if you're short or you're trying to sell things, like you'll just have to abandon the position, and at least like deep pockets kind of thing. Like they could abandon their positions and just end up buying, and that kind of creates more liquidity. It's really just short covering that adds fuel to that fire. So I think a lot of technical analysts and stuff that work for a lot of these bigger firms, they're kind of having the same conversation right now, where they're saying that they could probably be saying the same thing, where we've already, I guess technically from an extension perspective, we've already covered enough ground for this to qualify as like a wave 3 in this wave 5. like a smaller degree. You can already count the waves in it as well. So I could see a scenario maybe where you get just a little bit higher, and then you do see some sort of pullback like this, and then you see just one more kind of stab higher with even lower volume. So I think this is a real possibility, unless it exceeds a couple levels on the way down. But like I said before, like you really don't want to you really don't want to let it fall if you're bullish right now, because you're just pushing it higher, and it's called that blue sky scenario. So a lot of the shorts are forced to cover. They get wrecked once more, and then they just capitulate. They just surrender, and then they buy like everybody else, and then that's what creates that dangerous scenario. Because if everybody's buying, we are already at that Shiller PE level, which is either at or probably already exceeded as of today the 1999 levels, or even 1929. So it's I do I haven't stayed it for a while, of course. I just think it's a bubble, but it's not anything that's that anybody's not aware of at this time. It's just a matter of if you're trading it day to day, you got to pay a little bit more attention to these sort of signals, because they're very they could be very quick. And especially like I was mentioning this morning about it, like it's a pure speculators market now, where anytime you get like that news cycle based kind of trading, you get a lot of people that are on the wrong side of the trade, every morning when they wake up, and they keep trying to guess, and like guessing is not investing. Like looking at data, like that's investing, determining profits, and looking through expenses, and doing all that sort of stuff. But speculation is just, I think it's going to go up tomorrow. All right, okay, let's buy some calls. There's really no thought. You just do it. And I think it's been like that for quite some time. But eventually, the price gets driven up so much where there's really two scenarios. It's just it gets firmly rejected, and market doesn't support higher prices, and it heads down really quick, or you get a melt up scenario that ends in catastrophe, like multi-year catastrophe for the markets. And with every large bubble, we've seen very similar behavior. So what my concern is that, you guys, like, being part of the service and everything, I just want you guys to be aware that this is a possibility. And if you are positioned in a certain way, some risk management is definitely appropriate. But if you're long also, it's a little bit easier. Like you can set some stops, providing your broker gives you like a, trailing stop or something like that. Those are nice. But some brokers, they don't. They just give you like a limit or a stop order kind of thing. Some of the lower cost brokers will, but anyways, I think that you could see something kind of like this, where it's around that 71.20 level. For Nasdaq, this one's a bit of a different beast. I think you might see something a little bit different here. The trend line didn't hold at all, so this is junk now. But there is a chart pattern. I wouldn't say it's rare, but it doesn't happen a lot, where there's like a triple peak kind of thing, where it looks kind of like after the third peak, it kind of looks like a cup and handle pattern. But you would need to see a lot of sideways consolidation for that to be plausible. I think actually the more the easier pattern to digest here is really this wave 5. So I think overall the easiest thing to do here is just accept it, let the speculators speculate, and if it's really frustrating, stay in cash. Can't tell you what to do, but what I can tell you is that a night of sleep is very valuable. So, and I want you guys to be successful. I think one of the things that one of the things when I started the service that I wanted to stress was that risk management is very risk management is a very it's a very subjective kind of thing. One man's risk can be very conservative to another, and it's always up to you as the investor to determine your levels of risk. And you never know what's really going to happen, but what you can do is you can adjust positions as the conditions change. You're never going to have 100% of the information, but I think you will always have at least some sort of understanding if you can understand, like at least like the backdrop, what's going on in the market right now, and then what are the plausible scenarios, or at least the highest probability scenarios, and then if it doesn't work out that way, then pivot. So I guess that's it's the only lecture thing I think I'll give is that it's a dangerous kind of thing. We went from one very dangerous news headline driven cycle that that was very difficult to trade to now a nonsensical just meltdown, and there's there's really no rhyme or reason for it. It's just you're at the whim of some more powerful people than us. So all right, so to kind of summarize here, the bullish scenario is really I think the most important. The bear scenario has been invalidated now that we've got new highs here. But what I mean by invalidated is like immediate bear scenario. I think that this is probably the best. This is probably the best sort of view that we're going to get, at least at this time. Of course, it's already going to reach higher here. With futures, there's no sellers in sight, but I really think that they're just trying to hit some sort of target here before they pull it back, and then the future measurements I think will be a lot easier. It's always really this big wave three. It's always this big wave three rip that catches I think a lot of people off guard. They were the guys that were accumulating all the way down here and down here, but they also had highly likely they were accumulating all the way down too and got trapped and had some decent losses. But now they don't need to worry about that anymore because the dollar cost averaging with millions and not hundreds. So and that I think is ultimately the advantage here for them. But for us, I think just as standard operating procedure retail traders here, reading those tea leaves is going to be super important. So so any questions about this with at least like what this kind of looks like? Okay, all right. So just be careful, guys, is all I'm saying. All right, so let's look at the potential bearish scenario. So now that we've got some new highs and stuff, it actually makes it a little easier to kind of forecast out what we might see. So typically, what you want to do is kind of draw this peak to trough sort of view. The wave three, or sorry, the wave four thing I was talking about with like a flat correction. This is what I mean by it. But I actually think now that today we had some confirmation of new highs, that it kind of I think it kind of resolves this wave four. This actually looks like a sorry, let me show you kind of what I mean here. So the flat pattern that I had here, yeah, I mean you could count that here, and then we had this. We did have this view. So let me turn it into white, and I'll show you what the picture looks like. And if you guys remember, a couple of weeks ago, I think I had this sort of like the same sort of view that I guess like longer term that people that I was showing people that there's a possibility that this wave four here we get 5 waves down, and it's still it's sorry it's very hard to count because there's a big divot right in the middle here which you could count a different way, but we won't get into the technical aspect of that right now. I think it's important to just kind of show that this does qualify as a longer term sort of wave 4 here, and now that we have the new high, technically this could be your wave 5 on a higher time frame. So let me grab this thing I shared earlier. I think I did in discussion. Yeah, here we go. Okay, so this one here, I'll put it on the chart. I'll make it smaller, don't worry. So okay, so this is I feel like this expanded or regular flat here, this is kind of what we saw when it started here in October, and then we didn't really get a whole lot of selling, and then we got this kind of drive up here. We got a little bit of a retreat here, but this kind of just looks like a B wave on a smaller scale. I mean, in hindsight, of course. And I think I remember the webinar where we just got to that peak, and I think it was like a Wednesday, it was a Monday, January, and we're looking at this, and I drew something like this, but then of course it went up and made a new high, and I'm like, crap, but it's still kind of a a subjective game here. But when you look at this in hindsight, you're always kind of a little steamed that I was only early by like a couple days, But I guess better late than wrong. Okay, so this is kind of what I think. What I think we're seeing here is we just had this classic sort of wave 4 kind of pattern, but now that we have this potential, like this continuation of the pattern here, as we were talking about here, let me change the color. As we were just talking about this. This is where I think the next major or the next most important thing for us is going to be to see if like first where this tops, and then what kind of rejection you're going to see. Is it very high volume? Is it does it stop? Because when you zoom out, this wave 5 here, this is going to be the end. Okay, whether it ends in blow off top, I think bulls and bears would agree on this. Whether it ends in a blow off top, or let's say we get to the top of this, this top of this channel line, and then it rejects. Let's say that 7120 mark, or pretty close to that, and there's clear like 5 waves there. In my opinion, that's like, all right, eventually, or not eventually, but soon, I think it's going to roll over in a big way, especially if you, especially if you zoom out and you kind of look at these, these other wave patterns that we have. So like just kind of how we talked about it at the start. About here we go, with this 1, 2, 3, 4, 5. Yeah, I do feel like this is probably getting close to the end here. Either with like I said, either a blow up top or some sort of rejection, and usually it's catalyst. But I mean, you can see how one-sided this is. That's very classic of a final kind of kick in the teeth for counter trend traders. Just like, but I will say the bears have very, very thick skin. They really do. They've been just getting their asses whooped for years now, and they still come back. And they get made fun of now, but once you get to this sort of level, after all these years of buying, the business cycle will come back. It will. I guarantee you. And I know that being bullish is better for business, both with just the market in general, and also with even my service. Bullish is better because nobody, people get confused by short selling. They get confused by buying puts or options and stuff like that. So it's better to just pick your stock and talk about it and run. But at some point, you got to look at the writing on the wall here, and this is looking pretty nasty. If we do get some sort of like firm high volume rejection. I don't think it'll happen all at once, but I think with it, within a span of like a couple days, like you'll start to see some real like scary kind of selling where you'll get like a really deep kind of wave 1, and people will be like, "What just happened?" Like I remember like last April, there were like when we opened 5% down on Monday morning or Sunday or whatever that was, after Friday getting a little bit of support. That was the one day where I'm like, we might have a crash today. we might, and 5% down is not, it's a bad day. But after like 2 or 3 of those days, like kind of in a row, that's really bad, and you get a lot of people that are crushed. So I think this entire generation of traders hasn't seen some sort of crash like that before. All they've known is just up liquidity, more buying and more buying and more buying, and when it gets here, everybody's gonna be in disbelief. It's I mean, of course, I've never lived through a major crash, where I was old enough to understand what was happening. But when you study things like this, you read the tea leaves and you're like, oh, well, it's kind of, history doesn't repeat, but definitely rhymes. So, all right, enough of the high horse here with that. I'll give you one other little scenario here that's bearish, in order to kind of just get this rounded off. So, that to kind of be clear here, I do think we will see a little bit more upside here. I don't think it's time to be a bear yet, but longer term, I think that you will see a turn, and it's probably not going to be good. There's one other scenario here where I could see, let's say you get a higher high. This is possible as well, where you could get some sort of a irregular pattern here where this wave 4 is actually a lot bigger than we think. So you could see this sort of like this, where this sets up like sort of a channel up, like maybe an ending diagonal kind of thing. Here, let me show you what I mean. Oops. Oh, come on, going too fast. So I think you could see the potential here for I mean, I don't know if this is going to be true. Let me change the color on this guy, but I do think it's it's a scenario to at least uncover. So it's possible, but you could see a larger wave 4 kind of take shape here, and rule the wave 4 thing I was talking about. That's kind of what this means here. So from a measurement perspective, if I peek the drop here, highly likely you could see something like this, where you get some sort of let's draw it up. You get some sort of like some sort of high that's a little bit of a disbelief kind of thing for people, and then you get like a pretty big rip down, and then you find some support at a lower low, and then ultimately you see that last, like, the actual melt up part. But I think the volume's been high enough here where the dip has been properly bought, and there's been immediate bearish capitulation here. So I think that this is probably not going to happen. I think you're probably just going to see more of what we spent a lot more time on earlier, which is just that that extension of the wave 5, and then you'll see like a larger pullback. There's one other bullish scenario I wanted to cover, and that is the massive blow up top. I don't think that this is unrealistic, to be honest. Like, as much as I kind of laugh about it, let's just have some fun and speculate here. So if you kind of look at this, look at the symmetry here. I don't think that there's there's not like a big enough wave here, or a big enough pullback for this to, I think, actually like happen, but it's possible. So if you get let's say you get a reversal tomorrow or something, it doesn't go much higher. You want to look for pullback to 0.618, and if you get tons and tons of volume, then it could be a wave 2 and a 3, and that could be exactly what happened here. So that's just one. I think that's the uber bullish scenario, of course. I think the more likely scenarios, we'll see a little bit of stalling here. I think that, like, the gamma and all the options data for next week is supportive of at least running out of gas, and it is running out of gas. I mean, when you look at something like here, let me show you a QQQ. So if you look at it from like the hourly level, I mean, there's a very clear here. I gotta redraw this part because the RSI is so damn high. I never had to do that before, except for gold. I just. But if you look at something like this, you just get nothing but this, average downward divide here, and then you get this divergence of price. And I've been saying this for years now. This is the biggest indicator that this is not going to last long, is the price to volume ratio here. But timing is everything, right, guys? So hopefully that makes sense. I just wanted to kind of show you guys where we're at. I wanted to cover the different scenarios, talk it through a little bit. I kind of gloss over the longer term stuff with some of the other webinars I do, but for this one, it's been so far and so fast that I think it's just caught everybody by surprise. we've got this big old gap here to fill, a massive gap, several percent of a gap. And without any sort of like strong selling, I don't think it's going to fill anytime soon. I think it's just going to, the bulls are going to fight like hell to keep it above that 602 level. All right. Any questions before I cover the other stuff quick?
No, but the other stuff you're going to cover, I'm starting to get interested in natural gas because with the disruptions in the world having some effect. Also, we're going to have a super El Nino, which is going to make the southern part of the country really hot this year.
Oh, I hope not. Last year was hot. I'm in Arizona, so but I'm in the mountains, so yeah.
So it's starting to accumulate for a pretty good long time now.
Okay. Yeah, you're right. You're right.
I was interested in what you thought about that.
Yeah. So you're actually the second person today who's asked me about natural gas. I'm gonna have to update the charts on this guy, but and sorry, by the way, can you guys hear the chainsaw in the background, or do I need to shut the window?
No,
okay, good. Yeah, like I said, live out in the mountains. There's trees and chainsaws around here all the time. Manly men doing manly men things. All right. I mean, I get out my chainsaw every once in a while. It's fun. Okay, so kind of looking at this here. Oh, sorry, I got to adjust for a contract roll. So I kind of think, okay, before I say this, natural gas is called the widowmaker for a very good reason. It's very difficult to try to get your finger on like a good chart pattern or like good buyable levels, because you always have those like contract rolls that can be pretty big, and when you have those big contract rolls, you can get a lot of volatility with the price. Now, I think natural gas has been, well, shouldn't say unfairly, because natural gas, I mean, it's still a commodity, right? But I think the price is not reflective of the reality of what's going on. I mean, not only do we have Russian, energy supplies, contested here with the Ukraine war. I mean, they've been doing it for years. And also now we have like an actual physical supply constraint through the Strait of, the Strait of Hormuz. And with that, I just don't think like the price is actually caught up, or excuse me, caught up to it. So with gas, I kind of feel like we might see a little bit more like lower lows, but you can also kind of see at this level, you've got some decent buy delta. So let's kind of zoom in here and take a look. Yeah, I mean, since we've got a little bit lower lows, I'll show you what I mean by the contract adjustment. Like, you can see it gets a little nuts, where you had this entire September, or sorry, no, that's 2022, but you still had these pretty volatile kind of couple of months here with gas. And I think that it's just kind of creeping down. There's like sellers kind of look like they're running out of running out of gas. That's like the 500th time I made that joke. But they do, like they're still, it's very sell dominated. But I also think too, we have some political kind of work at play, where, I mean, if you guys remember a couple months ago, I was talking about like Russian gas, and like keeping oil low is good politically. It also hurts your Cold War enemy kind of thing, where those guys rely on a giant share of their GDP in like energy sales. So you get countries like Russia that are unfriendly to us, Iran, Venezuela, right? Like, think about all the people that the USA has gone after. They're all heavily dependent on the price of energy. So by keeping prices down, like oil and gas and stuff like that, like that's why I kind of feel like they're not following the typical seasonal patterns, is because there's something a little bit bigger at play. And if it makes me a conspiracy theorist, then so be it. But but I think that like the simplest explanation is usually the best one, right? And that's what I would do if I was in charge. If I was trying to do something where we didn't have to fire a shot, or it didn't cost us a lot of money, that would probably be the thing I would do, where I would step on the price of step on the price of energy. So, we flood the market with us or flood the market with ours, so they, don't have the ability to profit from that and fund their anti-us methods. So, but still, without that, I guess that's still hearsay, right? Like it's still something you got to mention, just because it does have an impact on the price. So if it is true, and probably is true, there's going to be some sort of like weight on top of that. So normally, like when you pay attention to things like oil supply or like contango, like you can see down in the the corner here with like natural gas, some of the different things that impact your contract prices. Those some of that calculus there gets thrown off when you have some things that kind of act on it from the outside. So long story short here, I think that gas has been consolidating for a while, and I think that when you have a lot of this kind of accumulation, or at least like it's been staying at a level for a while, you've got a lot of like heavy kind of sell delta here, and it's really just been kind of pinning things. RSI has been kind of deteriorating as well, and I guess just longer term, I think if you go a little bit lower, you're going to start to run into some buyers. So I mean, I do have some long positioning here with gas, but I don't think it's quite time yet. I think if you watch oil, sorry, but before I do that, I wanted to make sure I actually answered your question. I don't think I did.
No, that's fine.
Okay, all right. I wanted to kind of give you a background here, but I just think that probably a little bit lower, it's going to be probably reasonable, and I think that gas actually kind of or oil kind of supports that. So I think now that China's come out and said we're just gonna we don't care about your blockade, we're gonna honor our energy commitments here. So I think you might see a little bit lower low here with oil. I think this is starting to turn into, you can already kind of see it. I think it's starting to turn into this kind of consolidation triangle here. You can already kind of see like the head and shoulders. And other than like an actual true like ceasefire kind of thing, I mean, it's been violated. You're just not really hearing the news. You're hearing little tiny breadcrumbs, and it's just it's being used for for all these different price moves. But I think the big one really is what happens. So you're also getting a little bit of decline in volume here as well. So again, divergence, price and volume, bad for prices. But when you get a convergence of lower volume and price, that typically means there's accumulation going on. Things are going to turn around. So I think you will see some sort of something with oil where, I don't know, like Israel's probably going to attack something somehow, or something's probably going to happen. There's going to be an incident with one of our ships. They're going to get mad and close the strait. Whatever. There's going to be something that happens, and I think that'll be a catalyst for another move up. I think you can only drive the market with headlines for so long before people just get tired of it and just weary of that kind of trading. And I think we've gotten to that point. So I think that the more supply constraint that we have and the less control that we have over it, or the less control that the U.S. has over it, I think you're going to get higher prices because it hurts us. And it's definitely not politically cool to have high gas prices. I know where I live, there's a lot of complaints. There's not a ton of money on the mountain up here, not a lot of like tech jobs or anything. A lot of blue collar, salt of the earth folks up here. A lot of beard, like I said, chainsaw, manly men, who don't make $150,000 a year being a computer programmer. So they're very, very sensitive to the price of gas. And I hear it. You go out to the grocery store, people complain about it all the time. Anyways, I digress. So long story short here, I think this is going to be tied to the price of gas. And I think that will probably get a little bit lower here, and we'll see what happens when it starts testing the 50 here. And you might see some more accumulation from buyers, but you're starting to get some kind of stability in the middle range here, this like 97 range, and that'll keep gas prices at $4.50 a gallon for quite some time. At least another couple months, which sucks, but it is what it is. So I think probably going into summer, like definitely through May, you'll have some volatility here. And I think for you're looking at gas, you could have a little bit lower low with oil, and then probably see their kind of a pivot here. Any questions on that? Okay, so I'll just do real quick here with the yield. So the yield, I think it's probably got one more little stab down to go here, but I think that this is a pretty clear kind of this 4.21 is going to be a pretty clear kind of bounce point. It might go a little bit lower than this, but in my opinion, that would be a great time to add some TMV. So longer term, this looks like a B wave, and I think we'll see something along the lines of another kind of, we might see some sort of breakout here. Like this is like equities are really going to feel the pain here, with high rates like that, especially with people get laid off who are the big spenders, buying the houses, getting the mortgages. I think you'll have a lot of issues where people just will stop buying stuff. So prices are going to deflate with that. You'll just get, it's that cycle. But high yields, I think, are probably the most important thing to watch, other than the price of gas. So yeah, we might get a little bit more of a down stab here with some sort of news or whatever, and then we can get a pretty decent turnaround. And that's longer term, that's probably going to be not so fun. All right, so from gold, I'm actually not super sold that this is quite the top yet. It's kind of grinding there, but you can also see, again, here we go, get that divergence of price and volume. And if you're getting upset trading equity indexes and you're tired of getting whipsawed, gold might be a decent short, but I think this is probably going to be the last kind of short leg down. You might get a little bit more, but if you kind of zoom out, this actually looks like a pretty big bow flag. And I mean, I do think that gold is really going to be, or metals are going to be one of those. I've been talking to Don about this as well, but I think metals are going to be one of those things where it's an inflation hedge. Like a crypto is just digital. There's nothing you can hold in your hands, but metals are something that you can, and there's really no other store of value that I'm aware of. I mean, certainly won't be the U.S. dollar. The more money we spend, and it certainly won't be stocks if we keep staying pinned up in forward PE 40 land. But yeah, also too, kind of silver is I think we'll see kind of like one of those little deceleration kind of moves. Hold on a second. Silver is looking like it's making one of these kind of things here where you'll see maybe like one more lower low, and then you could see another takeoff here, like maybe a wave 5 or something. But you'll have to have yields go up in tandem with that. Does that make sense? Like it's all kind of inversely related. All right, so yeah, I mean stocks up, easy. But it does kind of look like it's making maybe like a little wave 4 here into 5. Yeah, it's pretty expensive for stocks, at least their market cap and stuff. Bitcoin, I think Bitcoin here is going to get interesting soon. I think what we'll see here is I think we're going to see the completion of this kind of flag here, and this is definitely a bear flag, and I think we will end up seeing that 52,000 or maybe even lower. I know that's not what you want to hear, crypto people, but this is a very classic kind of pattern. I think this is this, to me, this looks like a wave 4 of a much, well, nah, I don't want to go into that. It's a flag, and highly likely you will see the same you will see the same sort of extension when you get to the top. So I actually think I could probably see something like 42,000 for Bitcoin, and that would send people. It's actually kind of aligns pretty nice, doesn't it? Almost like there's a plan. Not conspiracy. Sorry. Anyways, all right. So Nvidia, this one baffles me. Just baffles me. Like you get all these bears for all these months, and then they just rip it up. and then nobody's defending it. So that to me, it just screams distribution is complete. They've distributed all their shares to all the people who think it's going to go to the moon, and their cash flow is just going to continue to be this XYZ. But I mentioned this last month, last week, where you've got these, with the liquidity, you've got this, excuse me, you have these, big companies that buy all these AI chips and stuff like that Nvidia supplies, but now they're all getting in trouble because they spent too much money. Look at Oracle. Oracle just laid off 30,000 people because they needed to fix an expense hole in their balance sheet. I've been in corporate finance before. We've had those discussions. A couple billion is a big hole to fill. But hey, that's just how it goes sometimes. That's corporate finance. It can be pretty ice cold sometimes, but in reality here, I think you'll probably see a little bit higher that this will reach up. It's also possible that you could see another run up here. I wouldn't put it past these guys to keep jamming it higher because it's just got so much weight with market cap. But yeah, that makes sense. But I'm certainly not buying it. I think it's just ridiculous. And then here's another scenario. I think Tesla's actually a very good long. Even if you get a pullback here and you get this 324, I would add more TSLL for sure. I think it's an appropriate sort of measurement, and also too, it's a kind of a convergence of fib levels here that I do think it'll be a pretty strong kind of short-term trade. Like if we get this B wave, that's a pretty monster trade. But I'd say just maybe give it a couple days and see what happens here. You could, just kind of freehanding it, 30% is not so bad, especially if you got TSL, which is 2x leverage or whatever. But again, risk management. But I just feel like Tesla's. I feel like they're going to get their earnings. You're going to get some price whips out there, but with the IPO of SpaceX and stuff coming out, I think there's going to be a lot of interest in Elon Musk sort of businesses. So that being said, this is it for MSTR. MSTR, I think it'll just get another little pullback and then maybe another slow advance like with Bitcoin, and then I think all these big boys are going to dump it. It's going to go much lower. So I'm gonna get out of my those terrible longs. But I'm still gonna add some shorts here coming up, but only when the market chills out a bit. Okay, well, that's it, guys. Any other questions or things you want me to cover? Oh, John, you mentioned sectors. The sectors. Let me dig into the sectors a little bit more. I'd like to take a look at some of the charts. Now that again taxes are filed, I have a little bit more time. But let me look at some of the sector charts, because last time I looked at them, like maybe a week and a half, 2 weeks ago, all of them were just like super inflated. Even utilities, healthcare, commodities, consumer goods, like all that stuff. Everything is just too high. So, but if there's any good opportunities, I think I'll certainly see if I can drum up that. But don't let me forget.
Okay.
Yeah. I think that's about it. Well, you guys, feel free to ask any questions. I know I went a little bit long here, but I promised some people that I would go into some detail about the longer term sort of views here. So I apologize for droning on a lot, but you would be surprised. People give good feedback about the detail. Not a lot. No, I'm kidding. I get some good feedback, but you can't make everybody happy. So some people like the 10-minute primer, some people like the hour-long thing. But hope you guys at least got some good information here, and you feel better prepared to handle what might come next. And if you got questions, you know where to find me. All right, guys. Thanks for joining, and have yourself a wonderful